Hey guys, veterans of the Marine Corps, Navy, the Air Force, Army, Coast Guard. Good afternoon, how are you? I'm the Director of Operations, I'm with Atlas Realty Group. I'm here today with some important information that I think everyone should know about. Today we're going to be talking about businesses, we're going to be talking about credit, and I have here Joshua Rico with Approved Credit, and he's going to give you guys some useful information and useful tips for entrepreneurs as well as consumers about your own personal credit and how to secure business funding and how to build business credit. So, Rico,
what's going on?
How long have you been in the industry?
Man, to be honest with you, it all started, a funny story, when I was in Iraq in 2009. I was a victim of identity theft. One of my own family members took $6K out of my bank account, right, without my knowledge. Mind you, this was in Iraq, right? One of my own family members took $6K out of my bank account, and I was a victim of identity theft. They plummeted my score down to the 500s. Ooh. So when I was overseas, I couldn't deal with it because we were overseas,
Right.
Mission comes first in the Marine Corps, right?
Man.
So with that being said, when I got back home, I tried to apply for things like cars, apartments. Yeah. And I got denied. I felt dumb. I felt vulnerable, right? I felt uneducated.
And you didn't know why that happened?
I basically knew why it happened,
Gotcha.
Right? I knew why it happened, but I didn't know how to fix it.
Understood.
I had a big problem on my hands. So I was like, I knew credit was everything, but I was, a young dumb Marine. I didn't know about that. It was the mission first, right? Which side note, I believe not even Marine, but every military person should know about credit. It's the foundation of life, right? You guys have to approve people, in your company with credit, right? So
every single day.
Every single day.
And every single thing you want to buy or purchase requires credit.
Exactly. So I knew that it was an importance of mine. So I started to read up on credit. I started to fix my credit, invest in mentors and businesses,
right?
To basically help me with this knowledge, right? Fast forward, I spent over $50,000 in business credit mentors.
Wow.
Yes.
Dude, that's a lot of money. Not a lot of young Marines or servicemen in general just have $50,000 put to the side in order to build their credit and build business funding and stuff like that. So tell me exactly, how long of a process did you go from the day I found out I was a victim of identity theft to the point where my credit is now fixed? What does that process look like?
So check this out. Everybody's looking for the easy fix, right? The fast fix,
right? Now, the instant gratification.
For me, this is the instant gratification generation, right? Which is good. There's not nothing bad with it. Some people have different outcomes. For me, it took me almost 9 years, because I put a halt on it, right? I knew that I was a victim of identity theft. I had some collections on my accounts that weren't derived by me, but I needed to know how to get rid of them. But the thing is that I waited all those years too. Yeah. To where it's like, and fast forward to 2019, I found one of my mentors. It was Ty Lopez. You familiar with Ty Lopez? I am. Ty Lopez and Stephen Lau. Shout out to them. I invested in one of their courses as well, right? And there was a book called The Credit Secrets. You've probably seen it on Larry King Live.
I have. I've seen The Credit Secrets. Yep.
So I started studying that. And I was like, wow, there's secrets that a lot of people in the United States don't know. Mind you, 79% of American consumers have something unverifiable, inaccurate, incomplete in their reports. They don't even know about their credit, right? So we as consumers in America, we need to get educated on the most important thing, which is credit, right? So fast forward to 2019, I invested over $50K during those times. And now I'm at, I think it's like a 787, 780s. I felt amazing, right? Yeah. Changed my life. From there, I started going even deeper. Now, the fun thing is when you start to fix your credit and build your credit, then you started getting, high limit credit cards, 25K limit credit cards.
25, 50, 100K credit cards.
Exactly.
Yep. So unlimited American Express Platinum.
Exactly. And the benefits are good. So the consumers need to know this is like when you build your credit correctly, you have to structure correctly, right? It's not always about the score. It's about the data points, right? In that, right? To build a good profile. But fast forward 2019, I fixed my credit. Now, 2020, right? 2 years ago, COVID happened, right? Mind you, I'm a licensed barber. I went to Paul Mitchell, everything like that. I was a licensed barber. I started to get a job as a licensed barber, but they shut down everything.
Yep.
They shut down everything.
The world stopped.
So what did they tell the barbers? hey, you can't work in school, right? Mind you, I was still doing house calls, but the thing was like, how am I going to support my family? What do I know? How can I, help people change their lives and, produce an income while home? So what happened was, I found a software that manages, clients. And I was like, I do know credit. I studied credit. If I can help people fix their credit, build their credit, and get funded, change their lives, it's a no-brainer. So I went all in, and now it brings us to this day. So now I have over, 200K of liquid credit cards, business and personal. And I use that. Now I'm leveraging that to buy investment rental properties and across America and putting them on Section 8 too. So that's a whole
nother conversation.
That's another conversation. But
that'll take forever.
Exactly. But the thing is that the importance of credit, why it's important. I mean, Jay-Z, you guys know Jay-Z said it best, right? You want to know what's more important than throwing away money at the club?
Right.
Credit. He's giving you guys tips. You guys got to, and when I say you guys, people who are watching, take your credit seriously, right? Learn, the laws that you're governed by and protected by. All right. So, and that's what we basically do. We help clients. Most of our clients, we have over 200 clients that we help get into mortgages, cars. I'm talking about Benz supercars, business credit, over $100,000. I've funded some clients, and we just continue to raise the bar and help people, because at the end of the day, if it ain't about helping people or serving people, it's not really fulfilling the purpose.
I understand.
But that's what we're doing.
Now, a lot of times we as service members, when we first get into the military, we typically 17, 18 years old, and we have no idea about what we don't know, have no idea about life. Much like Rico, I was kind of in a similar situation when I was 17. I joined the Marine Corps. I had no idea what credit was, never even heard of it, you know?
Yeah.
And then when I went to apply for my first car loan, the guy told me, he said, bro, you're not going to get approved for this. You got a 540 credit score. And I thought that was good. I was like, I got a 540 points. Yeah. That's amazing. Like, what's the cap? And he was like, it's about 850. And I'm like, and damn. I got a 540? Yeah, I'm over half. I'm good.
Yeah.
He was like, no, you're doing bad in life.
Yeah.
I didn't know cell phone bills went to a collections account. I didn't know what a collection account was. I didn't know how to fix those things.
Exactly.
Man, it took me 3 years to understand and learn how to remove collections. And then in early mid 2000s, credit repair wasn't a thing.
No.
It wasn't a thing. I never heard of someone fixing credit. You had the, I think it was, I ain't gonna say their name, but this is in law group back then. But it was, they were charging $1,500 up front and X amount of dollars per month to, help you with credit and stuff. And I ain't do that because number one, I was a PFC. I ain't had that money.
Yeah, we don't have money at PFC.
We ain't have that money. So I had to get in the books and I had to really learn how to fix credit. But once I really understood the back office of actual credit, and it wasn't just about the score, but the actual data points, then I was actually able to fix my credit and get into that mid 600 bracket, and as time went along, I started adding more things to my credit profile, and then credit starting to increase.
Exactly.
One of the biggest things about credit, which I want people to understand, is that your credit history is so important. Credit history is everything.
Yes.
If you got a credit card when you first joined the Marine Corps and you say, I don't use it no more, don't close that thing out. You're going to tank your score. You're going to tank your score. Okay?
You're going to tank it.
And here's one more thing that people are going to be absolutely stunned about.
Yeah.
Installment loans. They're horrible.
Okay. Go ahead. Okay.
If you buy a car, you finance it for 5, 6, 7 years, whatever. They typically have terms between 60 to 84 months on a new car.
Yeah.
Right? When you pay that thing off, guess what happens to that actual loan? It goes away. And that credit history that you built for that X amount of years goes away. So credit history is actually calculated, and correct me if I'm wrong, based on the actual age of the actual account. So if I had one for 14 years, 13 years, 12 years, they add it up and they do the average. And they tell you actual credit history. Am I correct?
Yes, but what people need to understand is there's multiple factors of credit. Yeah. So yes, some installment loans, they actually help you.
They do. Yeah.
10% of your score is a blend or mix of credit. Correct. So you can't just have revolving credit. And what revolving credit is just credit cards, right? You can't just have credit cards on your report. You need to have history of, do you have a mortgage? Do you have a student loan? Do you have a personal loan, installment loan, or an auto loan, right? But yes, have you guys ever noticed when you pay off a car loan, yes, that helps your debt to income ratio.
Yes.
But it tanks your score down a little bit. Why? Because you just closed a 6-year, for example, trade line.
Yep.
But it will go back up within like 4 to 6 months, but it helps your DTI, your debt to income ratio. But yes, you're closing down a trade line. So you lose 10% of your score. So the factors of credit, if I could break it down.
Sure, go ahead.
Guys, we could talk about credit for years, right? But the most important is payment history. It's 35% of your score, right? So for you guys watching this, right, set up auto pay and pay 3 to 5 days before the statement date. There's statement date and due date, right?
What's the difference?
The difference is the statement date is the date that reports to the credit reporting agencies, right? You want to pay 3 to 5 days before that, right? So it can reflect. The due date is just when your bill is due. You can always move these too. You can always move these to your payday and set them up on auto pay.
Yep.
All right. The next one under that is credit card utilization or credit card use, right? William, I've gotten people approved for mortgages with this one hack alone.
Just credit card utilization.
Just credit card utilization.
To increase credit score.
Exactly.
Yeah.
They're trying to get a mortgage and they'll be like, I don't know what's wrong with my credit. I don't know what's wrong with my credit. I look at their reports and they're 99% utilization.
Well, that's the number one thing right there is you're maxing out your actual spending power.
Exactly.
Now, another thing a lot of people there's a big myth about, because we all know that the VA loan is a no credit score requirement. That's in the VA guidelines. You still have to have a minimum credit score to actually purchase to purchase a house and to get a mortgage.
For sure.
Because the VA does not give you money. You're not getting money from the VA. The money is going to come from other different lending institutions, and those lending institutions have what's called overlays, and those overlays will tell the borrower the minimum credit score that they need to have. So while the VA loan does say no credit score requirements, there are lending institutions that have minimum credit score requirement. Like, for example, some lending companies say you can go as low as 580. Some say 620. Some say 640. Others will say you need at least a 700. Right?
Yep. Yeah. The big banks like Chase.
If you have a 580 credit score, you probably should not be thinking about a mortgage anyway.
I want to hit on that.
Yeah,
because a lot of people
about fixing your own personal situation.
Exactly. A lot of people, you can get approved for 580. Okay, don't put them in the mindset. Don't put the consumer in the mindset. Yeah, I'm good, 580. No.
Yeah, because then you got to think about pricing and what it's actually going to cost. It's a risk versus reward type system.
Exactly.
A lender going to look at as a higher risk borrower.
Exactly.
So the terms are not going to be as friendly.
Exactly. You're going to pay more in the long run.
Correct.
Due to interest rates, right? If you have if you have under 700 score, I just want to say this to the people. If you have under a 700 score, you're literally losing money. You're literally making less money with worse credit, with a worse credit score, right? Because of the fact that you're saving interest, you're saving thousands on interest. Yeah. Right. If with a higher credit score versus a lower credit score.
Right.
So you cannot afford to not fix your credit and build and leverage your credit. Right. So lower scores, you're making less money. You're actually wasting more money. Right.
Yeah.
But back to what I was saying, the factors of credit, right? The 30% credit card use is 30% of your score. Now, a lot of people say this. This is a trick question.
So before you
go ahead,
before you proceed, at first you said 35% was the actual
payment history,
and then 30% is credit utilization.
Yes.
Okay, continue.
But a lot of people say,
so now we have 65% of your actual entire
that's
credit.
It.
So keep going.
So a lot of people say, you want to stay under what percentage? Can you guys comment in the section below? What percentage do you guys think you have to stay under?
I was told 30. I was told 10, told 30, 15, right? 20.
Here's the
ideal.
I was
told 50.
No. Hell no, right?
Yeah.
I don't mean girl or anything like that. But
me personally, I try to keep my credit cards below 10%.
That's good. 6% or lower.
Okay.
Is ideal. If you ever go to the Experian app, right?
Yeah.
It'll say ideal credit or what lenders like to see. Typically lenders like to see below 30. But if you want to be ideal credit, below 6%. At most 9 to 10%, which is good, right? Mm-hmm. But when you're going for funding and little hacks and little, to increase your scores, below, 1 to 6%, that range, 1 to 3, 1 to 4%,
right?
They actually give you extra points. I don't know what it is. It's their algorithm.
Man,
right?
I have so many questions, bro, but keep going.
Yeah. So it's sometimes now I keep going. FICO, there's different FICO scorings too.
Sure.
Right? With FICO 10T and FICO 10 coming out now, this is a different scoring algorithm.
Right.
So they're going back and looking back 2 years So instead of having monthly snapshots on your credit report, now they're taking videos. You see what I'm saying?
Of an entire 2-year
of an entire 2 years. So if you fix your credit last month, they can be okay. Now, okay, you fix your credit. We're gonna dock you on those points.
Yeah.
So that's why I say to consumers, fix your credit now. You see what I'm saying? So you don't have to be subject to the FICO 10T. But anyways, 30% of your score is credit card utilization. I recommend being under 6%. Okay, not the 30%. Right? 30% is like the worst case scenario.
Yeah, guys, comment in the section below if you guys have heard different things about as far as credit card utilization. What amount that someone have told you and what was the justification behind it. Now, when you're choosing to take advice from people, a couple of things you need to be aware of. You need to think about their credibility and you need to think about the reliability of the information. So I always recommend you go out and do your own due diligence first.
For sure.
But please comment in the section below and please tell us what some of the different myths that you heard about actual credit card utilization, because there's so many out there. But, from Rico, the credit repair specialist himself, 6%, guys. 6%, keep your credit cards under 6%. We cannot, say that enough and emphasize that factor enough. Try to stay at 6%. And that's just my personal recommendation as well. For
sure. Yeah. And at most like 9 to 10% too, because they'll have legends, right? I like to go off the legends, right? If you look at Credit Karma, I know Credit Karma is not the most accurate.
So I heard that a lot. Why is Credit Karma not accurate?
Good question. It's not that it's not accurate. Let's clear that out the window, right? It just runs off a different scoring algorithm, which is called Vantage 3.0.
Gotcha.
Right? That's basically used for the soft pulls. Hey, let me get your last 4. Let's see, run a soft pull check, credit check, right?
Gotcha.
It's called Vantage 3.0. What lenders use, realtors use, they look at FICO, whether it's FICO 2, 3, 6, 8, 9, etc. Right? There's different FICO scores too, but most uses is FICO 8 and FICO 9, FICO 8, right? So that's why they say, oh, it's not as accurate as Experian, right? So being that they run off different FICO, being that they run off of different scoring algorithms, they have different grade, they have different point systems. But it's not that Credit Karma is inaccurate. It's just that lenders don't pull from Credit Karma. Does that make sense?
Yeah.
They pull from FICO.
So what people typically should be using Credit Karma for is just to look at, if you're applying for a mortgage, you should be looking at Credit Karma to see what's on your credit profile.
Yeah.
Not necessarily worrying about the actual credit score. Just looking at the profile to see what's on your credit.
Exactly. Are there any derogatory amounts? Which bring me to the next score, the next segment, right? Yeah. The factors of credit, which is derogatory marks.
How much that counts for? Oh, we're already at 65% utilization. And
so
also
it depends. It depends on this area. But the thing is
you're referring to late payments, correct?
Late payments is payment history, but also counts as derogatory. It's kind of tricky. So everything derives, if you notice, from payment history. You guys want to know how to fix your credit? Pay on time, and don't miss a payment over 10 years.
Yeah, correct.
Credit repair done.
Credit repair done.
Exactly, right?
Well, once again, like I said, we're in that stage of instant gratification.
Exactly.
We can't wait 10 years for a mortgage.
No.
So you got to consult professionals like yourself to get it done within a reasonable time. So before you continue on with the different segments of your credit score, what is your average amount of time it takes you to fix one credit? Let's say someone had, I don't know, a 560 credit score and they want to get a 700.
I love this question.
What that typically takes?
Yeah. I love this question. And I tell every client the same
Don't say
thing.
It depends. Don't say it depends.
It really does.
It depends.
It really does. This is why.
Okay.
This is why.
Gotcha.
I've had clients done in 3 hours before.
Sure.
I've had clients done in 10 days. I've had clients done in 6 months. I've had clients done in a year.
Okay.
Now, why does it depend? This client has a child support, right? This client has a bankruptcy. This client may have an eviction. Where there's other clients, it's just inquiries and 2 collections, which is easier, right?
So it kind of depends on what you're trying to fix as well on the profile.
And the process that it goes.
Some accounts are more difficult than others to get removed or fixed.
Exactly.
Understood.
But we like to say 6 to 12 months.
On average, you would say 6 to 12 months.
Yeah.
So that's really a good key for people to actually know. If you think about going credit repair and you think about purchasing a home within the future, you should probably start planning at least 1 year out and looking at your credit profile so you can identify any challenges that you may face when it comes to talking to the actual lender. Lenders also give you some recommendations on credit as well, but they're not the duty expert. Lender's job is to lend. A credit repair person's job is to fix your credit.
Exactly.
So learn to work with a bunch of different professionals in order to increase your life. Now, I will say this, that no one in his life have been successful on their own.
Yeah.
Everyone had to have a team. You need to find out who's on your team, who's your accountant, who's your CPA, who's your lender, who's your realtor, who's your credit guy.
Very important.
Who's your financial investor, advisor.
Yes.
Find your team.
Yes.
Find your power team and then go out and find success. Find people you know, like, and trust. Once again, make sure they're valid and reliable and credible. Okay?
That is very key because I've had some things. I have.
Yeah,
look, I've invested 50 and I lost about 50.
Correct. Now, there's a lot of people out there, that have came into the industry within the last 2 years, try to find work from home opportunities because of COVID.
Yes.
And there's a lot of people that have gotten to the industry, especially in real estate and mortgages and credit repair. There's a lot of pop-up shops everywhere,
Exactly.
but you need to look at their reliability, the validity of what they're saying, and also the credibility factor.
Exactly.
You're making some huge decisions when it comes to investing. You're taking your hard-earned dollars and putting it somewhere.
For sure.
And you want to make sure where you put it is actually going to give you a return and not a loss.
Return of investment. For sure.
So going back to the segments of different credit. Yeah. So far, just to recap for all the users, we have, 35%, which is payment history. 30%, which is credit utilization.
Yep.
And then now we're talking about derogatory remarks.
Derogatories.
How much is that?
To be honest with you, it's ever changing, right? Yeah. So don't know exactly the percentage, but I know it impacts a lot.
Okay.
So if you look at the legend in Credit Karma, they'll say this is the most important things: the payment history, the credit card utilization, and the derogatories. These are called what's labeled high impact.
Got you.
They impact your score the most. The derogatory remarks seems to be the most, people's problem, right? Mm-hmm. Collections, charge-offs, bankruptcies, etc.
Explain the charge-off because, people see that, I got charged off. I'm not paying that.
Okay. This is going to get real deep here, guys, all right? So
let's go, man.
Charge off.
Let's welcome to the deep end, all right?
I love it. Yeah. I like getting into these conversations. And the deeper I like to talk,
Go ahead.
All right. So basically.
I had to get my usher on.
So the thing is this, right? Let's say, for example, AT&T, right? The cell phone company, right? They say, look, Rico, we've been calling you for 6 months. We've been trying to collect, this amount of money for 6 months. You have not returned our calls. You have not paid it. So we, as a multi-billion-dollar company, we're going to write you off as a profit and loss, right? Which is a charge-off.
Correct.
That's how, you save on taxes. Taxes is huge, guys. All right. All right. So these big companies, these multi-billion-dollar companies know how to, save on their taxes. So they write you off as a profit and loss. What does that mean for you? Well, let me ask you something, William. So if they wrote you off as a profit and loss, aren't they supposed to send you a 1099 or 1099A or 1099C? Because it's basically income, right?
It's income for them, correct?
Yes, it's income for them. They're supposed to send a copy of that
Or
receipt.
rather, it'd rather be a deduction, not income. It'd be a deduction for them if they wrote it off. So they're trying to reduce the amount of income based on this write-off.
Exactly.
Yeah.
But they're supposed to send you a copy of that as well.
Technically. Do you ever get it?
Do you ever get it? No.
No.
But let me ask you, since when has income been able to report on your credit reports?
Never.
This is a violation of the Fair Credit Reporting Act.
Okay.
All right. And when we get to violations, this is basically, guys, look up the Fair Debt Collections Practices Act and the Fair Credit Reporting Act. Okay.
Those two key things. We're going to put those two things on the screen, so you guys can see them. What was those terms again? So
FCRA, the Fair Credit Reporting Act, right? The 15 USC 1681.
Ooh. That sounds sexy.
Ooh, it does, right? But you need to know these codes, right? And then the Fair Debt Collection Practices Act.
Gotcha.
All right. I believe that's 15 USC 1692, J or G. All right, but don't quote me on that. I have to go back to it. But
we're quoting you.
All right. But here's the thing. Right? Fair Debt Collection Practices Act, FDCPA, and the Fair Credit Reporting Act, FCRA. Look these up and study. You'll find that most of the things that we do in America or live in is, I don't want to say if it's controversial, but a lie. Or it's being perceived as, how do I say, like, the consumers in America are not as educated as they should be.
I always say in order to beat the system, you got to know the system.
Exactly.
But you can't beat the system from the outside complaining.
Exactly.
You got to be a part of it.
So here's one.
You're never going to be a politician with bad credit. I'm telling you right
You're
now.
right. You're right.
And you can't change the laws.
You can't.
All you're going to do is complain about it. So,
but you can use them to your advantage.
Correct. That's what I'm saying. In order
Exactly.
to beat the system, you got to be a part of the system.
Exactly.
Yeah.
And actually, what people may have wrong is Congress is actually here for you, right?
Correct.
Right. That's another conversation.
Yeah.
But like the CFPB, the Consumer Financial Protection Bureau, Obama put it in place after the 2008 crash, right?
Yep.
But this protects consumers like me and you.
Yeah.
This basically tells them, hey, Equifax, Experian, and TransUnion, my client, or this consumer who has rights in America is challenging your validity of what you're reporting.
Of what you reported. Yep.
Exactly. Now, let me tell you this, guys. Anything that's negative on your report, the credit reporting agencies like Experian, Equifax, and TransUnion, you have to give them permissible purpose.
Gotcha.
15 USC 1681B. Permissible purpose. Read that law, Cornell law, Google it. You'll see Cornell law and you'll bring it up. These are federal laws. This is not national, not local, not state. These are nationwide federal laws that you're protected by.
Gotcha.
And this is what there's no secret to credit repair. We just use these because anybody can fix their credit themselves.
Correct. I always say that too. You can fix
your credit. I recommend you do it.
If you're dedicated to doing so.
If you're dedicated to doing so and putting in the work and, like we do. So, but if you're dedicated to doing so, I recommend you do it yourself.
Yeah.
Because you're going to feel more empowered. You're going to have more education. And you're going to know how things really work in the United States of America, right?
Correct.
Which I do recommend. But if you don't have the time, that's where we come in. But back to what I was saying is the 15 USC 1681B, permissible purpose. Let's say a collection is on your report. You never gave them permissible purpose to report that or furnish that. Mm-hmm. Hey, CFPB, can you validate this debt? You see what I'm saying? So it's like there's so many laws that go into each collection's charge-offs. You see, I already ran on a tangent with the charge-offs. But charge-offs is basically this. They write you off as a profit and loss, and it's called the charge-off on your report. So basically, the company wrote you off as a profit and loss, and they're reporting it to your report. Right, but you're not supposed to report income. It's a violation. And here's another tip for those people who have collections, charge-offs, bankruptcies, child support, whatever negative item or repo. Right, look up that permissible purpose law. But also, that 79% of consumers in America have inaccuracies on the report. Right, it's documented.
Right,
the FTC conducted a study on that most reports, which is over 200 million Americans, have something inaccurate, unverifiable, or incomplete on the report.
Gotcha.
If you can just prove and show that, those items are exactly.
It's what you can prove.
It's what you can prove. Mm-hmm. Now we're even going as far as and now disclaimer: I am not a lawyer, CPA, or this is not financial advice. I just go off of what works, right, and experience.
Sure.
I have two people that I'm guiding through the litigation process against these consumer reporting agencies. They're not bureaus, guys. All right? They are not bureaus. They're for-profit companies.
Correct.
The only bureau is CFPB, the Consumer Financial Protection Bureau. Stop giving them the power. You're giving them the power.
Yep.
They are credit reporting agencies. You ever call and someone pick up, no offense, but they're not from America? Mm-hmm. They're for-profit companies.
They outsource.
Exactly. Nothing wrong with it.
To reduce the actual cost of labor.
Exactly. Nothing wrong with it.
For-profit company.
Exactly. Nothing wrong with it. It's just, you have to know your laws.
Yeah, understood. Now, let's switch gears a little bit because we're pressed for time. What about people with good credit that's trying to get great credit?
Ooh, I love this.
Because, I'm kind of like in that situation right now. I'm trying to get to that 810, 820, but I'm stuck at like 780 for like the last 3 years.
Well,
so what do people like me, and I'm sure there's tons of veterans out there, in a situation where they have a high 700 and they want to get to like almost perfect credit. I've only ever seen maybe a handful of people with perfect credit. Guys, if you're not ashamed to show your credit, if you got over 840, just drop it in the comments below so I can give you a high five, man. I know one of my boys, I don't want to call his name out, but he's another realtor in the industry. He had a credit score of 849.
Yeah.
Another realtor. And then a guy that we work with, he had an 841. I know this lady in Texas, she had an 847. I'm thinking like, how do you get that? You know what I mean?
So here's the deal, all right? So, and I'm going to break down the data points of that. That goes with your personal credit too, right? The thing is, anything above 781 is considered 800.
Oh, really?
I myself I'm in the 800 club, right?
Yeah.
I could pull up FICOs, Vantage. I'm in the 800 club. It's good. It's just a flex,
It's
right?
a flex.
It's a flex.
That's all. I'm saying, if you got it,
Yeah.
drop it in the comments below and let's flex.
Yep.
Not me because I don't got it, but let's flex.
And you get there. I mean, I'm gonna give you some tips to get there.
Sure.
Right. So, but if you're above a 780, same thing.
Yeah.
And here's the thing. I'm gonna be honest with you. If you're at an 800, you're not using it. You're not leveraging your credit.
I leverage my credit a lot.
All right. So that's why.
One thing, and people may think this is crazy. Last year, I was looking at my credit profile and I noticed that I haven't gotten a personal loan in 10 years. So I took out a $10,000 personal loan.
Yeah. You got instantly approved, right?
Oh, yeah.
They want to throw money at you.
They got approved in like 30 seconds.
Exactly.
And I took 1 year to pay it off.
Okay.
So that's one thing I did, and that put me over a 750.
Yes.
Because I was stuck at like 740s for a while. I got a personal loan paid off within 1 year, and that put me in the high 700s.
Okay.
So you saying different uses of credit, that's an actual fact.
Yes.
You got to have different uses of credit, but use it responsibly.
Exactly.
Like I put everything, I'm talking everything I buy on my Amex.
Yes. You get the points, right?
I get the points.
I love the Amex.
Because you know what? I travel for free.
Me too.
Yeah. Because points add up on your credit card, and then you just redeem those points for, travel vouchers.
Exactly. Exactly.
Debit cards, you get nothing for using a debit card besides spending your money. Yeah. You got to pay that money anyway at the end of the month. You already spent it, so why not get a reward for it?
I tell my clients and other people too, like, use your credit cards. One, they're FDIC insured. Yeah. Right? Have you ever, if
you ever get fraud,
exactly.
The crazy thing is, don't tell nobody I told you this, but if you accidentally make a purchase, you can just call your bank and say it was fraud. I didn't tell nobody that. But the banks will work with you. Yeah, the banks will work with you. The banks will work with you.
Yeah, versus your own personal debit card
that you had to put a pin in and verify. Yeah, that you made this purchase. It's hard getting money back from a debit card versus a credit card.
Yeah, very hard. Use your credit card, get the points. That's how you can live free with hotels, flights, car rentals. Not only that, get your own groceries, gas, and get a discount on your mortgage and or rent that you're paying. Right. With the points and cash back that you get from these credit cards. What is the result from that? It's having good personal credit.
Got to have good credit, though. In order to get those great credit cards, you got to have good credit.
Exactly.
Do me a favor real quick while we wind down. Just name the top 3 good credit cards that people should have.
Oh.
As an active duty service member or a veteran in the Marine Corps, what is the 3 top advantage credit cards that you have?
Well, here's the thing. It goes off what their goal is. Do you want to travel? Do you want cash back? Are you a student? Are you new? Yeah. Because the Discover It card is for students who are new and if they don't have any credit cards as well. But here's the thing. I'd rather go for banks, right? Navy Federal, guys.
Navy Federal?
Navy Federal is one of the best.
Yeah.
Right? Banks, not so much as the mortgage side, right? But that's another story. But Navy Federal, Chase.
I like how you display.
You know what I'm saying? Chase, the Freedom Unlimited, the Chase Sapphire mixed with the Amex Platinum. That's a trifecta.
You got a crazy combination there.
Crazy combination. Hilton Honors.
I have that one.
Do you know?
Yeah. And then I also have the Amex.
I kind of want to break out some cards.
No. Don't break the cards out. Don't break the cards out.
But that's what I'm saying is there's a bunch of cards that have different benefits. Yeah. But the key thing is to make a relationship with the bank.
Sure.
You build that relationship with the bank. By relationship, guys, I'm not talking about, hey, I love your guys' bank. I want to apply.
That means being a customer with them for quite some time.
Exactly.
Like, for example, I've been I have a relationship with Navy Federal for the past 15 years. There's no way Navy Federal's going to tell me no about giving me a line of credit or some money. There's no way.
No way.
In fact, I just hit them up, 2 weeks ago? Yeah. I went to make a large purchase in excess of 6 figures. Of course, it's going to make me some money. I'm not crazy.
For sure.
It was approved within 1 minute.
And that's what I
didn't
love about
even didn't verify my income.
No docs.
They just pulled the credit. No docs. They just say, your history with us have been outstanding.
Exactly.
So you got to, in order to do that though, you got to pay your crap on time and pay stuff back.
Yes,
because the only way they make money, they lend money out. And they want qualified borrowers.
That's another conversation too. But that's what I'm saying. Relationship. They lend money out, right? So put about 5 if you have 5 to 10 G's. If not, put 250 in it. But use their products.
Start small.
250.
Use their products.
Pledge loan.
Yeah.
ooh, I have a hack for people who are new, like who have no credit. But it's just if you're a Navy Federal, right? There's something what's called a pledge loan.
Yeah.
All right. This is to build credit.
Gotcha.
What happens is it takes about $250 or $500 to, open an account. I recommend a higher amount because when lenders see that, they see that you have obtained, he can handle 5, 10K loans. We're going to give him higher limits when you do apply for credit cards, right? But let's say it's $500 or $250, right? Mm-hmm. That you open up the pledge loan and you're going to put into your savings. You're going to say, you're going to call Navy Federal. And you can do this with multiple banks too. Remember, you put this in your savings. You're going to say, hey, Navy Federal, I want to open up a pledge loan. And I say, I want to automatically deduct it from my savings account. So that $250 is going to be reported, right? For whatever term that you pick. I recommend the highest term for long, right? Remember the credit age, right? But the hack is this: between that first month, pay 90% of it, right? Over $200, and then have like a $1 or $2 payments a month until that term ended.
That's a good hack.
That's a bar, right?
Yeah.
So the thing is that you could do that with multiple. You could do that with multiple banks.
Mm-hmm.
What is this doing? It's building a relationship. So when you do go ask for funding on a personal loan, or a car loan, or just a credit card, they see that he's been a member with us for this long. He's used our products. He's deposited money. He's built a relationship. We're gonna give him $15K credit card with cash back. Boom. Now you start using your $15K credit card, but for groceries, rent. Yeah. And there's other loopholes to use that $15K without spending money, but that's another conversation. Yeah. Right? But the thing is just credit. You have to know credit, right? You have to have your profile set up correctly so you can obtain these credit cards.
Rico, I really want to thank you for coming out, man. I really do appreciate it. We're pushed for time. Hey, guys, we covered a lot today, but just know you got to remember, credit is everything. Without it, you can't do anything. Okay? For sure. So next week, we're going to come back here with Rico again because we got a lot more things to talk about. We always want to make sure we provide some valuable information to you, our users and stuff. Sure. So next week, we're going to talk about business funding. We're going to talk about business credit. We're going to talk about new businesses and how to get those things up and started, because one thing me and Rico just discussed earlier, a lot of times when we're transitioning out of the military, they push jobs on us. Like, you got to get a job, you got to get a job, you got to get a job. But what about those people that want to be entrepreneurs? What about those veterans that have a creative mind? What are you going to do? How are you going to get funding for your business? How are you going to set up an LLC? And then a week after that, we're going to come back with another tax professional. We're going to talk about how to set up legal entities. So guys, keep watching. And if you like what we talked about, just like it, share it, and subscribe. Once again, this is Rico. My name is William King. I'm with Atlas Realty Group. Thank you for watching.